Hey there, crypto trader. If the market's recent stagnation had you dozing off, it's time to wake up because things are heating up in the world of crypto. A massive 7% surge in Bitcoin yesterday has jolted the crypto market back to life, and the rally came with an impressive surge in trading volume as well. The catalyst behind this sudden rally was some promising news about Bitcoin, which we will get you up to speed on. But the real question on everyone's mind is, can this bullish momentum be sustained, or will it once again fizzle out? In today's video, we dive deep into the current Bitcoin charts for potential insight into this crucial question. We also hone in on the critical support and resistance levels that you need to have on your radar now. Finally, we analyze how the overall crypto market fared in response to Bitcoin's strong move. Spoiler alert, many altcoins lagged behind, and this is a vital piece of information you can't afford to overlook. So before we jump into the details, don't forget to show your support by hitting the like button and subscribing to our channel. By doing so, you'll stay updated with our insightful market analysis videos designed to help you navigate the crypto landscape successfully. A quick reminder though, everything we discuss here is simply based on our interpretation of the charts and is not intended as financial advice. So without further ado, let's see what the charts say. Let's start by taking a look at the daily time frame of Bitcoin. On the daily chart, we see that Bitcoin sold off on August 17th and then traded near its lows of that sell-off for nearly 2 weeks in a tight sideways range, putting many traders to sleep. Now, typically, when you see price action consolidating near the lows, that often leads to a breakdown to new lows. However, we also mentioned in our last video to keep an eye on the 10-day moving average, which could spark a bounce if prices got back above that. And the 10-day moving average is this green line. And notice that before yesterday's breakout, we actually tried to get back above that 10-day moving average for several days in a row and couldn't. So then yesterday, as soon as the price got above that 10-day moving average, that sparked some short-term bullish momentum, which carried the price higher. So yesterday's move was initially driven by news, but it was actually the combination of news with a technical breakout above the 10-day moving average that made yesterday's move so powerful. So yesterday we got a move not only back above the 10-day moving average, but the price actually rallied back above the 20-day moving average as well, which is this blue line that you see here. Most importantly, the rally was backed by strong volume. Notice that volume yesterday surged to more than double its 20-day average volume, which is this blue line. So we had a big volume surge. When you see big price advances, you always want to see it confirmed by higher volume, which is important. However, it is noteworthy that the volume still was lower than the sell-off volume we had just a few weeks ago. Now, in case you've not been following it, let's get you up to speed on yesterday's news that moved the market in such a big way. Recently, investment firm Grayscale applied with the SEC to convert their Grayscale Bitcoin Trust product, GBTC, into an actual spot Bitcoin ETF. And upon doing so, the SEC rejected their application, and they said that they were concerned about market manipulation with the spot Bitcoin ETF. That's rather interesting considering that the Grayscale Bitcoin Trust is based upon Bitcoin futures. Me personally, I'd rather be investing in a product that's based on spot Bitcoin rather than the futures, but hey, that's just me. Anyway, yesterday, the U.S. Court of Appeals ruled that the SEC's rejection of Grayscale's application was arbitrary and capricious. And that does not mean that the SEC must approve Grayscale's application or others in the future, but it definitely paves the way as a win and increases the odds of a successful outcome for the next wave of applicants. And furthermore, by September 2nd, the SEC is due to give a decision on 7 different Bitcoin-related ETFs from BlackRock, Bitwise, VanEck, WisdomTree, Invesco, Fidelity, and Valkyrie. So there's a lot of news floating around right now about spot Bitcoin ETFs. And while yesterday's news was not a sure thing of approval, it definitely, like I said, was positive, and the market reacted favorably to that. So, of course, if there's a spot Bitcoin ETF approved or more than one approved, then we could expect to see a potential rush to buy Bitcoin among institutions to keep up with the demand. So that news was the impetus behind yesterday's move. But I want to reiterate here that with the Morpheus swing trading strategy, we really don't care much about the news. Our trading strategy is based upon what we see not what we think, right? And when you're trading based on the news, it's often trying to predict the market's reaction to news. You may think that the market's going to go up with good news, but it actually goes down, or vice versa. So rather than trying to follow the news and predict what to do, we simply look at the price action and look at the charts, and we see what the charts say. So even if we didn't know about the news, we could see that yesterday the price moved above the 10-day moving average on big volume and surged higher. So that was a technical breakout above short-term resistance, as well as moving above the 20-day moving average. News or not, that's a bullish signal. So we caution you about getting too caught up in news and focusing more on what the charts are saying to you, because in the end, that's really all that matters. Everything you need to know about the news is already built into the price. Yesterday's breakout above the 10-day moving average and the 20-day moving average on big volume was certainly noteworthy, and it's encouraging, but I caution you against getting too excited because we're certainly not out of the woods yet. After Bitcoin broke out on big volume in late June, it traded in a sideways consolidation pattern for more than a month and came into support of its 50-day moving average, tried to hold it, but eventually in early August, the price broke down below the 50-day moving average. And at that point, the 50-day moving average went from being support to becoming resistance. And then shortly after that, we got this big sell-off here on August 17th. Traders and investors who bought the breakout in late June and held through to consolidation are now trapped because they bought at a higher price. Many of them bought this consolidation. And if they didn't sell during the breakdown, their first move is going to be to sell into strength when we get a rally. That's typically what happens is human psychology. People say, well, let me just sell to try to break even or get close to it. So you've got, basically 2 months of overhead supply that Bitcoin's going to need to absorb. So it's going to require a significant volume to get back above this mess of consolidation here, where the bulls got trapped. We also have the 50-day moving average coming in right around the 28,700 level, which you can see here that converges actually with the low of the consolidation period before we broke down. So in the short term, keep an eye on that level. It's going to be a very important level that could be in play here in the coming days. Again, notice how the 50-day moving average, the red line's there, as well as the lows of the consolidation before the breakdown. So you've got convergence of horizontal price resistance. Prior support becomes new resistance, and the 50-day moving average. If we can get back above that, then we could see a significant change in bias in not only the short term, but the intermediate term as well. But until that happens, the market could get choppy and volatile because we've got this short-term bullishness now shaping up with still an intermediate term downtrend. And so it could be a little bit choppy. Now, if you're looking to get a potential entry into Bitcoin, consider buying on a potential pullback, such as right now, it's pulling back to support of the 20-day moving average, and it's holding above it. So that's key. We want to see the price holding above that 20-day moving average, and it has been. However, we may need to see a bit more price consolidation. If we zoom into, let's say, the 4-hour chart, we can see that it's forming a bull flag pattern. If we see a bit of sideways consolidation for a few more days, that's actually healthy. It could build a base of support to make the odds of the next breakout sticking a little bit better. But you can also see in the 4-hour chart more clearly here, how difficult it may be to overcome all of this selling pressure that we recently had. But as always, keep an eye on the volume. It's all about the volume because volume is the gasoline that drives the rally. As always, keep your stops in place just in case the breakout attempt does fail. We're in a very news-driven environment right now, so you definitely want to be aware of that. If we zoom out to the longer-term weekly chart of Bitcoin, we can see here on that, let's get rid of that horizontal line, we can see that both the 10 and 20-week moving averages now are acting as resistance overhead. The 20-week moving average throughout all of 2023 was support, bounced there in March, bounced off it again in May and June, and then once we broke down below it earlier this month, now that has become resistant. The 20-week moving average is currently at 28,200 level. So, combined with this 28,700 level, we've got resistance right around 28,200, which, surprise, surprise, is right around yesterday's high. So overall, with Bitcoin, we're encouraged by yesterday's price action, but certainly not out of the woods. And we need to see continued bullish price action without any high volume selling. And of course, we want to be aware of the news that's out there, even though we don't base our trading decisions on the news specifically. Next up, let's take a look at Ethereum, we can see that similar to Bitcoin, Ethereum has been trying for several days to break out above its 10-day moving average and finally did so yesterday, moving in sympathy with Bitcoin. In our recent crypto video, we actually analyzed the chart of Ethereum and we said that it was forming kind of an ascending triangle type pattern, which I'm drawing for you here. And we said that if we got above the high, the upper channel of this pattern, that we could see a bit of a rally. And that's what happened yesterday. We popped above the upper channel of that, but we also cautioned that the 20-day moving average would act as resistance, and that happened as well. So you can see here that unlike Bitcoin, Ethereum is now still below its 20-day moving average. Tried to get above it yesterday, and it's pushed back. Tried to get above it yesterday, but it pulled back. Nonetheless, Ethereum is holding above its breakout level from yesterday. So we want to keep a close eye on Ethereum because of that 20-day moving average resistance. We could see a brief undercut below the upper channel of this triangle, but we'd want to see the price action get back above it quickly. Otherwise, we'd have a failed breakout, which would trap even more bulls, and that would be negative. So keep an eye on this very important level right here, right around the 1700 level. So very easy to remember, 1700. We want to see Ethereum hold above that level. Of course, yesterday's high is resistance. If we get above yesterday's high around 1744, then that'll put us back above the 20-day moving average. But just like with Bitcoin, we've got a ton of overhead supply here from the consolidation of the past several months, as well as the 50-day moving average. And very similar to Bitcoin, we can see here that we've got a convergence of resistance with the lows of the consolidation and the 50-day moving average. You can see here right around 1813 is the 50-day moving average, and that's right also in the area of the prior low. So as with Bitcoin, this is going to be an area of resistance we want to keep an eye on if the market does get any follow-through momentum. So with both Bitcoin and Ethereum for swing trading, we could look to buy on a pullback here, keep a tight stop below the breakout level, and then we'd want to look to sell into strength as we approach the resistance of the 50-day MA. Rather than holding through a pullback like we would do in an uptrend, we'd want to look to sell and take profits into strength. When Bitcoin and Ethereum broke out yesterday, we immediately began scanning hundreds of altcoin charts looking for emerging relative strength. The Morpheus swing trading strategy is based upon trading cryptos that have relative strength to the benchmarks, and that's how we outperform the market consistently. However, as we told our members in the crypto chat room yesterday, there really is not much moving in the altcoin market right now. In fact, yesterday's rally was really focused primarily on Bitcoin, followed by Ethereum. We didn't see a lot of bullish action or relative strength in the altcoin market. Regardless of the Bitcoin news, it's not unusual for a new bull rally attempt to be focused primarily on Bitcoin. This is what we often see in cycles over the years, is when a new bull phase starts, the money primarily flows into Bitcoin, followed by Ethereum, then large cap altcoins, and all the way on down. So we may be seeing some rotation out of the altcoin market into Bitcoin for now, especially in anticipation of this news. So we'll be keeping an eye on the altcoin market, but for now, we're simply not seeing any valid setups that have a low risk entry point and a high risk reward. So if anything, we'd be looking for a potential buy entry in Bitcoin if we can find a low risk entry point. But the altcoin market needs some time. The charts need some time before any valid setups would present themselves. Now, one exception to that we did find is SEI. SEI is a recent ICO that's only been trading for a short period of time. And since 2 days ago, SEI has rallied nearly 50% from around 12 cents all the way up to a high of around 17 cents. And it did so on higher volume. Notice the volume the past 2 days has been very strong, along with lighter volume on the down days and much higher volume on the up days. So this is encouraging to see. And although we don't have a lot of price action in the charts, for example, we only have a 10-day moving average that can be calculated at this point. That's actually a positive, right? Because when you've got cryptos that have been trading at much higher prices for a long period of time, you've got a lot of people that are trapped at higher prices that will be looking to sell when we rally. And that's what we call overhead supply. So the market needs to have stronger demand to absorb more supply. So right now, we like the idea of ICOs because they have less overhead supply, less people trapped at higher prices, and therefore requires less volume to potentially move high. As always, we'll send a trade alert to members of Morpheus Crypto Pro if we spot a valid low-risk entry point in SEI. Otherwise, we will primarily be focused right now on Bitcoin and looking for a low-risk entry point in Bitcoin. Again, remember to trade what you see, not what you think. Although news matters, it's really the price action that matters much more. Everything that happens in the news is reflected in the price. That's going to do it for now. We hope you enjoyed this video, found it insightful, and we look forward to seeing you in our next video. By the way, if you'd like to learn more about our crypto swing trading service, head on over to morpheustrading.com and just drop your email right on our website where you can receive free crypto swing trade ideas and market analysis every day. See you again soon.